Hi there. My name is Victor Alui, and I'm the head of investments at Sankore Global Investments. This is your weekly financial markets recap. We start over in the US, where the markets essentially took a breather from its recent rally, some profit taking on Nvidia, and also conflicting signals from the February jobs report sort of doused sentiment. On Friday, the S&P lost 0.65%. The Dow was down 0.18%, while the tech-heavy Nasdaq lost 1.16%. However, for the week, the three major indexes closed lower. The S&P was lower by 0.26%. The Nasdaq was down 1.17%, while the Dow lost 0.93%. This was the worst week for the Dow since October of last year. Now, although the job numbers came in hotter than expected at 275K against an expectation of 198K, wage inflation sort of slowed, and also unemployment ticked up as well. Now, this essentially offered some hope that the Fed would still go ahead and carry out its rate cut this year, as the expectation now is that the Fed certainly would be able to orchestrate the so-called soft landing, where the labor market remains really resilient, but then sort of loses some power and loses some steam, not at a clip that undermines the performance of the economy, but at a clip that allows the Federal Reserve to really come in and start to dial back on its tight monetary policy stance. Going into the rest of the week, really, the markets would be looking out for CPI data due out tomorrow. This would essentially offer more clues as to maybe how quickly the Federal Reserve goes ahead to start reducing rates, and when it does that, really, so the market will be looking out for that CPI report, tomorrow, as it would prove crucial, in directing near-term market moves, really, particularly in the US. Now, in geopolitics, Sweden joined NATO. Accession documents were signed by the Swedish Parliament on Friday and were, transmitted to Washington, D.C. This also basically follows Finland joining as well. These countries basically applied to join NATO in the wake of the Russian invasion of Ukraine. And for Sweden in particular, this is a breakaway from its non-alignment stance that has held sway for centuries, really. So this, joining of NATO by Sweden and Finland would certainly have, very strong geopolitical implications in the months and even years to come. So this is something to really, keep an eye on and see how things develop on that front. In China, the two-session meeting, which started last week, basically ended earlier this morning with the committee setting new goals, for the new year, economic goals essentially. GDP target for the year is at 5%, inflation at 3%. The government essentially also looks to create about 12 million new urban jobs. The idea is to tackle, the youth unemployment that has become a bit of a problem, for the Chinese economy. It also looking to issue ultra long, special bonds of up to 1 trillion yuan to basically fund, special infrastructure projects. It's important to note and point out at this point that these, bonds are typically not included in the deficit calculations, for the government. So whatever deficit numbers you see are usually understated, as these ultra long bonds are usually not, included. Also, the central bank governor in China hinted at the fact that, they were still open to further monetary easing, via rate cuts, really. That meeting was really silent on moves, around the real estate sector, which, was quite a surprise. The real estate sector for us still remains at the heart of the issues that continue to plague the Chinese economy. And really, in the absence of any holistic move to address that issue, the economy is likely to still remain, very, very challenged. And over here in Nigeria, there was an NCD auction last week, which basically created a bearish sentiment in the market, really, as participants basically looked to sell off their positions and reposition for higher rates at the auction. At the auction, the DMO offered about 337 billion worth of bills, but the bills were oversubscribed to the tune of about 1.9 trillion, while the DMO allotted or sold about 1.2 trillion. Stock rates closed significantly higher. The 90-day closed at 17%, which was 24 basis points higher than the previous auction. The 180-day was 50 basis points higher than the previous auction and closed at 18%. while the 1 year paper closed at 21.49%, which was 249 basis points higher than the previous auction. In all, in the secondary markets, across the T-bill curve, rates were 71 basis points higher on average. The same sentiment essentially held sway, in the bond markets, with yields closing about 30 basis points higher across the bond curve. For the remainder of the week, really, system liquidity will be the major determinant of market direction. System liquidity closed in a deficit of 2.2 trillion on Friday. This will prove very crucial in directing markets this week, as we're likely to see some sell-off as participants look to create some liquidity to sort of douse the huge deficit that we're seeing. Although there is expectation that we're going to see some coupon flow in from FGM bonds this week, and that would basically assuage the tight liquidity situation. Nevertheless, a 2.2 trillion deficit is quite formidable, and would really be front and center in determining what happens to fixed income yields this week. That's it for our market recap. Thank you very much. Do have a productive week.